Welcome, and thank you everyone for joining us for today's PENTalk. If you have any questions during the presentation, please submit them through the question box. We'll answer as many questions at the end as time allows. If we don't get to your question today, we will follow up with you afterwards. Tomorrow, you will receive an email with a link to replay today's broadcast. So let's get started. Hosting today is Kate Blake, Learning and Development Manager at Pentegra. Kate has been with us since the beginning of her career, where she started in the retirement benefits field. Today, Kate is going to provide an overview of how you and your clients can best tackle this year's 5500 season. With that said, Kate, I now hand things over to you.
Great. Thank you so much, Lizzie. And thank you, everybody, for taking the time out of your schedules to join us today for a riveting discussion of the Form 5500. What I want to do today is really divide this presentation into three pieces. We'll tee things up just with a quick refresher and discussion about the purpose of the Form 5500. Sometimes this can be helpful to remind clients as they're going through this process. Speaking of the process, we'll talk about what it entails along with any ancillary processes. I'm thinking plan audit. Then we'll round out the discussion with a look at the contents of the Form 5500, which have changed a little bit over the years. Back in 1995, which is the first year I could find records for, there were only 9 possible schedules that could be used on the Form 5500. Now there's 15, so we want to make sure we understand exactly what we're doing when we're working with this filing. So let's kick things off by talking about the purpose. This is a critical enforcement, compliance, and research tool for the DOL, IRS, and PBGC. So it's really not just a check the box situation, even though I'm sure for many of our plan sponsors it feels like it is, but it's a resource for federal agencies, for Congress, and for the private sector in assessing employee benefit, tax, and economic trends and policies. It's helpful, again, for government purposes, but just think about it for ourselves as retirement plan practitioners. This data is available on the DOL's website, and you can download historical 5500 information going back years and years and years. And yes, it's a rather meaty data dump, but now with Copilot and Claude, we have so many options for analyzing this data. So it's a really useful resource, but it is important that plan sponsors fulfill their obligation in filing this Form 5500. Otherwise, we won't have this data. These filings are the main source of information for where we get info about who's sponsoring retirement plans, what type of plans, what are the investments that are held, how many participants do they have. And again, thinking to us as practitioners, this is important when we're thinking about plan design and retirement readiness. It's also important for participants and beneficiaries because this is the mechanism that allows the public to monitor the operations of retirement plans. So yeah, probably when you're looking at the webinar invite for today, you might be thinking, oh, Form 5500, maybe a little bit boring, but necessary evil. But this really is a tremendous source of useful information for all stakeholders who are involved in retirement plans and their administration. Now, with that said, I do want to mention many of us in the course of our work in this industry come into contact with clients or prospects who will say, oh, I didn't know I had to file a Form 5500. And of course, most plans are subject to these requirements, except for a few exceptions, plans not covered by ERISA, one participant plans, some 403B plans like church plans. But many more plans are required to file. If you come across this situation with non-filers, especially if they are your clients, please take action right away. Don't wait for the IRS or DOL to send, a not so friendly little note about your delinquent filer status, because the penalties these days are steep. So the non-filer penalties, the IRS penalty is up to $250 a day with a maximum of $150,000. But that's nothing compared to the DOL penalty. The maximum DOL penalty is $2,529 a day with no max for non-filers. If you do encounter non-filers, if they're your clients, refer them to the service providers. Often, like here at Pentegra, we have a compliance team whose main function is helping get these non-filers or delinquent filers back on track, back on the regular annual filing schedule. It's also an opportunity for prospects. It's a great way to build up a business. If you find clients out there who are non-filers, getting them again back on track is a great way to build that relationship and potentially in the future bring them on as a client. So what are we looking at in terms of filing stats? I said before, a lot of organizations are required to file the Form 5500. Now, admittedly, I will say my numbers are from 2020. I checked for updated ones. I couldn't find them this year, but according to the DOL, as of 2020, approximately 864,000 pension and welfare benefit plans filed a Form 5500. So that is a pretty significant number. Let's talk about the prep and the filing process. And I'm going to assume, for purposes of this discussion, a calendar year plan in my examples. I think many plans are calendar year plans. If you have an off calendar or work with an off calendar year plan, you can adjust the dates accordingly. But for many of us working with calendar year plans, we are starting to ramp up with the 5500 prep and filing process because, of course, for calendar year plans, our deadlines are going to be, well, this is for any plan type, but for calendar year plans, it's coming up because it's the last day after the 7th month after the plan year end. Unless a plan is put on extension, more on that in just a moment, but as many of you know, that delays the deadline by 2.5 months. So for calendar year plans, the deadline would be punted out to mid-October if that plan is on extension. And speaking of filing an extension, one nice development as of just recently, the form required to file an extension can now be filed electronically instead of a paper form. So we're happy to see the IRS and DOL continuing to move towards online access and submissions and digitization. It's important to note when we're talking about recent changes to the Form 5500 that Secure 2.0 did implement one change pertaining to large versus small plan filers. This change has been in effect for a couple of years now, but it might tie in with something that may be on your radar later this year that we'll talk about in just a sec. But just to tee up this idea of large versus small plan filers, so this change began effective with plan years on or after 1/1/23. And what it says is that a plan is considered to be a large filer if there are 100 or more eligible participants with account balances at the beginning of the plan year. Now, this changed from previously where a plan was considered to be a large filer if there were over 100 employees, whether or not they had a balance in the plan. So, as you can see in the third bullet point, the new rule allows employers to disregard employees without balances, reducing the amount of plans that are required to obtain an audit, and in the process, reducing expenses for those plans. I want to draw your attention to another change that is potentially available under Secure 2.0 that you may want to think about when you're thinking about discussions of large versus small plan, and that is the increase in the cash out limit. So Secure 2.0, one of the voluntary provisions is the increase in cash out limit from $5,000 to $7,000 for small balances. I think that any plans who are considering adopting this provision, if it is available with their service providers, with their record keepers, should of course weigh the pros and cons. I think there are upsides and downsides to adopting that voluntary provision to increase the cash out limit to $7,000. A potential downside is retirement plan leakage. Assets are leaving the plan. It may hurt employees' retirement plan readiness long term. But the flip side of the coin, increasing the cash out limit to $7,000 is another avenue that could potentially be pursued to get these number of participants in these plans down to small plan filer status. So I just wanted to put that out there since we're already talking about changes that came about with Secure 2.0. It's a different provision, and it is a voluntary provision to increase the cash out limit. But if you have a plan that is teetering on the edge, in light of the fact that the Secure 2.0 amendment deadline is the end of this year, it may be worth looking at those numbers and having a conversation before any clients, sign amendments, or before you have conversations about what voluntary provisions clients might want to adopt. Just another way, like I said before, to strengthen relationships, look out for our clients, and make sure that we're meeting their needs. So that said, why does large plan versus small plan filing status actually matter? Many of you, I'm sure, know, of course, it's because the large plans generally have an audit, and that's going to be time consuming, and it's going to add expense to running a retirement plan. There are some transition rules, and these rules still remain in effect. So what makes a plan large? Generally, as I said before, this is going to be a plan that is over 100 participants, but there is this transition rule, and it's this 80 to 120 rule, which is an exception that allows a plan with 80 to 120 participants to file as a small plan, no audit, if it filed as a small plan in the previous year. We never want a client to be surprised with an audit. So it's always a good practice to look at your full book of business, look at the number of participants with balances, see if anybody is teetering on that threshold, and again, maybe worth having conversations as you're going down the pathway of Secure 2.0 amendments, if that is something that could potentially help reduce headcount as well. So who prepares the Form 5500, who reviews it, and who files it? This is going to depend on the specific services that are being provided to any given client. So if you are an employer and you have a plan, take a look at your service agreement. That's going to indicate who does what. If you're an advisor and you work with a book of business, take a look at that full book. You can reach out, of course, to your Pentegra contacts, and we're always happy to help you figure out what we do for which plan. But typically, Pentegra will prepare the Form 5500 for the plan. Usually a TPA will prepare the form. Whether or not we file is going to depend on the services that we provide. So if we are the 316 administrative fiduciary, then we will file the Form 5500 on the client's behalf or on your behalf if you are an employer sponsoring a plan. If we are not the 316 fiduciary, it's going to depend. Typically, we'll require the client to file it, but really always check your service agreement, because sometimes in some of our service agreements, there will be a checkbox or a carve out or a line item for Pentegra to sign the Form 5500. So the bottom line is just know that preparation and filing of the Form 5500 are separate functions. Pentegra may perform both. We may perform only one, but the service agreement really is the key to knowing who does what. Whether it's done by a client or it's done by Pentegra, the Form 5500 is always going to be filed electronically via the DOL's eFast2 system. This is something else to consider. Again, if you're an employer sponsoring your own plan, or if you're an advisor working with a book of business, here in the second bullet point, if Pentegra does not file the Form 5500 for a plan, make sure there's a dedicated point person at that business who is ready to file that Form 5500. This person's going to need to have access to the electronic filing system to submit the filing. So make sure they have those credentials. I think we all know user ID and password woes at the 11th hour sometimes can be, one of our biggest issues. So make sure that they have their credentials. Also make sure they're clear on the filing deadline. Is the filing on extension? Typically, I also recommend that there should be a backup point person. I have seen situations where a client has, thought that they have dotted all their I's and crossed all their T's and had a point person who had the credentials, knew exactly when the filing was due, and then, oh my gosh, they got sick, like the day before the filing, and it was late. So in addition to having a point person, just make sure that there is a backup person. And again, make sure that you know whether or not it's going to be that July 31st deadline, not on extension for calendar year plans, or for a non-calendar plan, that last day after the 7th month after the plan year end, or with an extension, the deadline of October 15th. Many plans, I will say, do go on extension. Some other considerations for large plans really have to do with the audit. According to the DOL and Employee Benefits Security Administration data, it's estimated that 30% of plan audits have what they classify as unacceptable-major deficiencies in their Form 5500 audits. And this is putting participants and benefits at risk in those plans if those plans are not brought into compliance. So businesses, advisors, everybody who touches a plan, we can all work together to set the stage for a successful audit by really primarily ensuring that the census data for the plan has been submitted to Pentegra or the TPA, whoever it is, in good order. If you are an employer and you're unsure of the status of your census submission, feel free to reach out. You do have access if you have a filing that is due with us. Typically, you do have access to a plan sponsor portal where you can see whether or not you have submitted your census. If a census is still outstanding, it will show up. It's called the active tasks section of the portal. It's front and center. You can't miss it. If you have something due to us as an employer and you log on to that portal, you'll see it right there and you can submit your census through the portal. Or you can always give us a call and an email and we're happy to help anytime. This is the time to complete this task if you have not yet submitted the census data. So, and again, the same message, if you're an advisor working with a book of business, you can reach out to us and we can give you just a list of all of your clients along with the status of their census submission, because this is the information, of course, that's going to potentially be selected in an audit when auditors are looking at participants to make participant selections and things like that. So we really want to make sure that we're not scrambling to get that census data submitted. With that said, I mentioned at the top of this webinar that the schedules within the Form 5500 have changed over time. So I do want to take just a couple of minutes to go through what's out there. What is required to be submitted and by whom, and what does it look like? This, by the way, is all available at this web address that is right up here on this slide, but I mean, you can really just Google Form 5500 schedules and it'll just bring you right to this link. It's kind of neat because you can scroll down and you can see all the historical schedules, which is where I came up with that stat from 1995, but let's stick in 2025 here. So we've got just the Form 5500, the Form 55 SF and EZ, which apply to certain small or one participant plans, and then the schedules. The schedules which are filled out are going to depend on a couple of things, including whether you are a large plan or a small plan. So you can see here with the Schedule H and I, the financial information. And also one of the newer schedules on here is the Schedule MEP. That's going to be filled out by, the name is a little bit misleading. It's actually going to be filled out by both MEPs and PEPs. So understanding what type of plan we're working with here is going to help us figure out what schedules need to be attached to the Form 5500. Let's take a look at a couple of them. So here's an example of this year's Schedule C. So this is going to be our service provider information. This is where we list who's doing what for the plan. And importantly, how much money are those service providers receiving? And as we said at the beginning, this is a great way for participants and even for employers to get information on retirement plans and plan fees. It's helpful when determining, what's the plan paying and is it reasonable? And again, all of this information is available for public download. I mentioned before that the Schedule MEP is one of the newer forms that's attached to the Form 5500, and I think that this is an important one because it's a little bit nuanced. So generally speaking, when we're looking at plan structure, there are going to be typically 3 broad plan structures. And I'm speaking broadly here in defined contribution terms, thinking of the 401ks, 403bs of the world and plans like that. We could see a single employer plan where we have just one employer who is sponsoring their own retirement plan by themselves. In that situation, they would not need to fill out this new Schedule MEP. Or we might see a MEP, a multiple employer plan. This is the older version of a group plan scenario. There's 2 types of MEPs, open and closed MEPs. In an open MEP, we have lots of different employers participating in one plan who may or may not be related to each other. And those employers are all, unrelated employers are all going to file their own Form 5500. Conversely, we might have a PEP. A PEP, many of you know, pooled employer plan. This came about as a result of Secure 2.0, and it was kind of the answer to that MEP shortcoming that I just mentioned a moment ago. With the MEP, if it's an open MEP with unrelated employers, everybody's responsible for their own Form 5500. If it's a PEP, the newer iteration of group plan structure that was provided for with Secure 2.0, now we only have to file one Form 5500. So there are some benefits to a PEP, but it's worth noting to bring it back around to our discussion about audit. When we're thinking about audit eligible plans that are PEPs, we're looking at the participant totals across all the adopting employers. So a PEP, if it gets above 100 or 120 in consideration of the transition rule, then is subject to an audit, even though an individual adopting employer might not have been had they gone it alone with the single employer or open MEP route. So like we said before with plan provisions, with everything, including plan design, there's pros and cons, but the decision regarding plan design is going to drive how this Form 5500 is completed and the client experience of navigating the Form 5500 process. Here, I just wanted to put an example of the Schedule H. This is the financial information. As I mentioned before, this is one of the ones that is dependent on whether or not it is a large plan or small plan. I just flipped over to the next slide here, which is the Schedule I. It's the same thing, requesting financial information, but this is for a small plan filer. I want to talk just for another moment about some closing things to think about as you are working with clients or working yourself on the audit this summer, working on reviewing a draft Form 5500. It's important to consider, the purpose, things that are going to be reviewed, and best practices to move this process along. So the purpose of this audit for large plan filers is to ensure that the plan is operating in compliance. Compliance with what? With the plan docs and with retirement plan rules and regs. I mentioned before that a key piece of this is to get that census data in. The reason is because, as I alluded to before, a lot of different things are going to be looked at during an audit. and that can include employee and employer contributions. So have that information readily available by making sure the census data is submitted. They may also look at any distributions that have occurred, participant eligibility testing, allocations to participant accounts, vesting, and forfeitures. Sample selections of participants or distributions and transactions are usually made to validate that criteria. The auditor is also going to review a draft of the Form 5500 prior to filing to check for any discrepancies in data entry or calculations. So it's important to make sure that the audit is taken care of timely. Again, you're probably going to be working on it this summer. The earlier it can get wrapped up, the better, because then that gives time for review of the draft 5500 and any edits that may be needed, which the auditor will typically communicate to the TPA, in this case, Pentegra, who can then update the Form 5500 prior to the filing. Another thing, in addition to making sure that census data and plan operations are in good order, is to make sure any late deposits are taken care of, because the Form 5500 requires disclosure of any late deposits at the end of the plan year. So because of that, it's a best practice just to complete any necessary correction before the Form 5500 is filed for those associated late deposits. So in addition to asking the question, is the census data in? Are we a large or small plan filer? Do we know what schedules we need to complete? And what's the audit status, if applicable? Also ask yourself or your clients, are there any late deposits? I pretty much just got ahead of myself on this review slide, but having a thorough understanding of this process ensures that everybody remains compliant, that we stay away from those large penalties that the IRS and DOL can establish, and that, you know, we're providing information that is useful to the marketplace, to Congress as they're passing retirement plan legislation, to participants in understanding what kind of fees retirement plans are paying, to advisors in understanding what is out there in the marketplace in terms of services and clients. So just to wrap up, be aware, if you have clients or you are a client with us here at Pentegra, 5500 services almost always include 5500 drafting, especially if we're the 316 fiduciary. That's almost across the board. Just make sure, again, to double check that service agreement. Most plans are going to be provided with an extension to allow for extra time. Be aware of that change in determining large filer status that occurred a couple of years ago, and keep the Secure 2.0 amendment process coming at the end of this year in the back of your mind if you have plans who might have any participants teetering on that cash out level. Make sure the census data is in, and make sure there's no late deposits. Ensuring that all of these tasks are complete and in good order this summer will set clients or yourself up for a successful Form 5500 filing in July, October, or wherever your deadline may be for off-calendar plans. So with that said, those are my prepared remarks today. Lizzie, did we get any questions into the chat box?
Thanks so much, Kate. No, we have not yet, but there's still time. Feel free to submit those questions in the chat box, and we are definitely going to reach back out to you with those answers. So with that being said, thank you, Kate, and everyone for attending today's PENTalk. As mentioned earlier, you will receive a recording of the presentation tomorrow. Thank you, and everyone have a great rest of your day.